So the first issue, I think, Mr. Ujjwal and Mr. Dorji, you've heard, what I would like to do is this way. You've heard Amarjeet explaining the concept, okay? And what I suggest is, I would like to consult very quickly. Dr. Balu, would you like to sum up after they've given their comments and show what you think are the issues, okay? So, Ujjwal, who would like to start, you think? Mr. Dorji? Thank you.
Well, esteemed guests, panelists, a very good afternoon. Thank you very much. Just to begin where we are, for Bhutan, we all know, we all heard about GNH, but how our development philosophy has been centered, giving, placing well-being, then sustainability and equity as the core mandate. But down the line, when we really dissected and tried to bring it in the financial world, we face challenges. The first challenge is, how do we connect this value system to the financial architecture? The second is, how do we translate this effort and make it into investment that not only brings in impact, but also yields value in the eyes of the investors. So based on these two challenges, I think I see social stock exchange as a solution which will not only balance, we call it double materiality, which will not only balance on the return, but also will look at what are the long-term impact that has been generated through such an investment. It's a very bold step for Bhutan, particularly if we build this ecosystem where Dr. Singh, I think, Mr. Singh mentioned about it. It is a platform where purpose meets capital and market becomes a force of good. And this is where, based on the principles of GNH, this is where increasingly the markets are working towards. We talk about ESG framework, we talk about sustainable reporting, we talk about now instruments such as green bonds, sustainability linked bonds. At the end of the day, these are all effort towards converging towards something which is more than return, something which is not calculated in terms of profitability matrix, but in terms of long-term impact for the society. For Bhutan, of course, in our little effort to contribute towards the social well-being, in 2018, we started a crowdfunding platform, modeled something similar to what SEBI's regulatory framework says, except that the only flaw that we saw is that there's no monitoring and reporting framework, there's no post-disclosure framework, and this, in a way, conflicts with the trust of the donors, be it donors or the investors. And we see a potential in scaling up such a model in our exchange. And we are also looking at how, besides going green, how our exchange could also rope in such social initiatives, build a platform for social enterprises, particularly the non-profit making organizations, the NGOs in Bhutan, and also tap into, probably when you become a platform, also tap into resources that are available outside, which naturally seeks such a purpose. So in terms of the framework, in terms of the legal mandate or legal structure, we are yet to have it in our listing rules. We want such an institution to be kind of a public ledger for trust, public ledger for transparency, and the beneficiary of such a platform to be accountable to the money that they have raised or they have achieved in raising. So with this, I end my first argument. Probably in the next course of discussion, I'll be happy to look at how the forces of the world are changing the way we are doing things in Bhutan. Thank you very much.
Hello. So, I was a little bit flustered, so I did not try to sum up what my impressions of what Amarjeet was telling us. And Dorji actually tried to, he's head of this stock exchange here. Does that fit into what Amarjeet was saying? Does that fit into the Bhutanese model? Just let me give you 1 minute to actually sum up how I see what Amarjeet was really saying. Amarjeet is really saying that capitalism should be celebrated through the stock exchange. Okay? The capitalism is basically for capitalists to make money. It's pure GDP, no GNH. GNH is only part of it. But that's very elitist. There are only 57,000 listed companies in the world, and out of that, 4,000 basically accounts for 70 to 80% of the market cap wealth. All right? So basically, stock markets are for elitist capitalists to make more money. I mean, the shareholders benefit. That's not an issue. We celebrate that. If you then look at the other side of the picture, there are probably 400 or 500 million small and non-profit making enterprises who cannot get this capital. Right? So when India suggested this idea of the social stock exchange, I thought this is brilliant. This is a celebration of funding for social enterprise, for civil society to make a difference. So the normal debate in capitalism is state or market. They completely forgot about civil society. So Amarjeet's idea was, hey, we already have this stock exchange infrastructure of listing, trading board, clearing and payment system. Why don't we do it for the social sector? And that to me is brilliant. And India's, innovation in the idea of a no-profit, no-return instrument is absolutely astounding. Because as a former regulator of Hong Kong stock market, this is the biggest casino in the world, one of the biggest, put it this way, sorry. This is to help the poor people, these, enterprises do good. So now I want to invite, Ujjwal from the chief executive of the Druk Holding, Druk Investment Holding Company, to give a national perspective. In the sense that if you have a high level, if you are there to look at how the capital markets and the markets for social enterprise should develop for the gross national happiness, what are his views? And I think, we debate this in an open manner so that we don't commit him to any issues that, he may not be comfortable with. So, Ujjwal.
Thank you. Good afternoon. I think when Mr. Singh talked about, social stock exchange in the intersection of social and the capital market in a way, it got me thinking that we should also have investments intersect, which can be, because a lot of investments we see are funded through traditional financing instruments. But if we go back and see when transistor was being invented, it was not commercial then. But imagine the impact it has had on social, in economics of nations to societies around the world. But today, NVIDIA's, which is running on the transistor that was discovered 50 years ago, makes the biggest social impact. But we cannot think of social stock exchange financing NVIDIA kind of projects today. But then the birth of NVIDIA, I'm just putting NVIDIA as an example, started with something that was so foundational. So my point is, how can we look at investments in Bhutan where we can make an intersection of some of the projects which can have long-term social benefit, but right now requires some, in the classical sense, a risk capital, a blended capital, but could we look at those projects through a social stock exchange financing instrument which raises? So that's one point I wanted to see. So we can be probably very creative in terms of building stock exchange, social stock exchange, in terms of financing certain projects in Bhutan, which will have foundational impact in decades to come, not just for Bhutan, but for global. So that's a little ambitious, but if you look at the next speaker who is going to talk about GMC, I think it's less ambitious than that anyway. So maybe we can have deeper discussions on that, how we can blend projects to look at financing through the social stock exchange. As you asked about, a little bit of a national perspective, if I work for Druk Holding Investments, and if you look at just the, I want to put investments in 3 categories for Bhutan, let's say. The first category being traditional commercial outright investment projects. For example, let's say hydropower projects. I'm not looking for social stock exchange to invest in hydropower, probably. Those projects, if you look at the national perspective, we're looking at $30 billion north in next 15 to 20 years, because we have a national plan of 15 gigawatt of hydro and 5 gigawatt of solar. And even if you take $1.5 million per megawatt of hydro, we are talking, and $500,000 per solar, we're looking at $25–30 billion investment requirement just in the first category of investment in Bhutan. And that's just the beginning, because without energy, you don't have anything else. So we need creative financing. But that's probably not the category that we're looking at today. The second category I want to talk about is probably something that I mentioned as my first point. How can we blend certain investments, projects, which we could look at, and Mr. Dorji will probably be the instrument creator in Bhutan, in discussions with Mr. Singh and others, which can finance the second category of investment. I want to bring the perspective of exploring geothermal, for example, exploring hydrogen, for example, where we are talking about risk capital today required. Otherwise, Bhutan can never have geothermal. Bhutan can probably never explore natural gas. So how can we initiate, probably a question for us, through stock exchange, social stock exchange, how can we initiate these kind of projects, which actually has a huge benefit, social and impact in the future. With geothermal, you could be doing hot spring spas in the villages, which can bring in ecotourism, financial, into the villages, which then has direct impact on the principles of the social stock exchange. So that's the second category of investments. And my last point, and the third category of investments which we can look at is innovative projects. So when we started innovation and technology department at DHI, we talked about one project, and I did have a quick discussion with you a couple of days ago. It was called the GRIP project, which we never took off because there was no capital for it. GRIP was like more of grassroots innovation, project, where very quickly, you have a